Welcome everyone to the Kendall Report. It is Sunday night and we've got a lot ahead of us this week. This is going to be a major week and we've got all the heavyweights coming out with earnings. We've got Microsoft, Google, Apple, everybody's coming out this week. So I'll go through some more detail on that here in a few minutes. But before I do, make sure you subscribe, hit that like button, and hit the notification bell. Good job. We got 1,000+ likes. Let's do that again for tonight's video. And I've got some great surprises coming for you. I know I just keep teasing you. As we get into next week, I'll release some more information on what I'm working on, and I think the channel is going to improve quite a bit just in its delivery from the standpoint of all the content that I want to get through to you, and hopefully you'll like what I'm about to do. I believe you will. I bounced it off quite a few people, and so far good feedback, thumbs up, right? Okay, so let's go through just a couple things here. Last week, those of you that are short must have had a lot of fun. Up 4.7%. NASDAQ up 5.2. Russell, the weakest, as I've been talking about, up 3.6. And I just think that what we're seeing here, there was a lot of folks that seemed to think that there was a capitulation on Friday. We are up like 20. We were up 20 handles. I think we're up around 10 at the moment. So we've given back a lot of these things. I'll go through the details in a minute because we've already hit some key metrics already. We traded over 3,800, which I've been talking about for over a week, getting to. So we actually have gotten there. Let's take a look at what's ahead of us this week. I'll go through all the econ stuff, and then I've got something I want to talk to you about tonight that I think is worth keeping a watch on. And so let's talk about Monday. We've got IHS manufacturing, IHS services. The IHS numbers aren't really watched very closely, but they do give some indication. I don't expect to see much from that. And as far as the earnings go, I'm going to go back and forth here. On Monday, we've got 93 earnings, but everything's kind of garden variety stuff on Monday anyway. There's a couple that are interesting, but a lot of those are just kind of garden variety releases. On Tuesday, we got the FHA housing price index expected to be down. Like I said, this is a housing crisis that we're in right now. If there's a recession anywhere, it's in housing. We've got that coming in, expected to be minus 0.5. And then we have the case shower expected to be 14.2. That's down quite a bit from previous numbers. I think we were up around 18, 19. I didn't get a chance to verify that. So, but 14.2 is expectation on case shower. And then we've got in consumer confidence coming in expected 104.7. Wednesday, mortgage apps, expecting them to be down. Last week, down 4.5%. That's just going to continue. I mean, we've got mortgage rates printing up at 7%, and I don't think they're done as of yet. New home sales is going to be a big report. That's going to be expected to be 550,000, and you know that number's liable to miss just because of what's going on with the real estate area. Thursday is an interesting day. GDP coming out expected to be positive 2.1, so that's going to break the 2 consecutive quarters of down. But I believe this is going to be not a big event, but I think people are going to be looking at it. Deflator is expected to come in at 5.3. That was up quite a bit. Everything is happening is we're starting to see a moderation of the inflation, and that's likely to be in the backdrop of everything that we're dealing with on a day-to-day basis from a fundamental standpoint. So watch out for that as well. Durable goods coming out expected to be up 0.4. Big day Friday. Usually Fridays are pretty, kind of just settling in after all the week's action. But Friday we have PCE coming out, and this is the Fed's big number they look at. And remember, next week we've got the Fed coming out. On the 1st and 2nd is the Fed meeting, so we've got that coming too. So a lot of scuttlebutt's going to be going on about all of these metrics that are coming out. But we're looking at a PCE coming in 0.3 on the headline. The core is expected to be a plus 0.5. I didn't get the year-over-year numbers. Apologize for that. U of M, University of Michigan, consumer confidence at 59.5. So let's look at the earnings. Let's go back there. I was going to go back and forth, made it easy. Earnings, like I said, 93 coming out on Monday. no big deal on garden variety. Tuesday, Microsoft after the close. So a lot of that is going to be for Wednesday's opening. And there's 193 reports. There's quite a few reports coming out on Tuesday. We also have Google coming out. So we got Microsoft, Google. There's Visa coming out. There's a bunch of really big names coming out. So Tuesday is going to be big. Some before the market opens, some after. On Wednesday, we got 285 total. We got Visa, we got Meta, we've got Coca-Cola, and most of these, once again, are coming out after the market close. And then on Thursday is the big one, but after market close is going to be Apple, Amazon, Intel. So there's a lot of, if you look at this list, there's a total of 947 coming out, and there's a lot of big names. This is going to be a big week. And I've been talking about these earnings for the last several weeks as we come into earnings season, is that the expectations have been so disastrous it must be bullish. And that's what we saw. Like I said, last week S&P up almost 5%. And I do expect to see some of this follow through on the upside. We may see a couple of days of softness, but there's a ton, once again, to absorb. And then we're right smack into a meeting with the Fed next week. So lots going on. Expect volatility to stay really high. And there's not going to be any changes in that for sure. Just going through some of my notes to make sure I've got everything here. That's all the primary stuff that's coming out. But I do want to mention something. And I just had this thought. I saw a tweet or a headline somewhere that said Janet Yellen says that inflation is not embedded. I think I put that on Twitter, and when I put that out, I realized something. We've sat here for the last year and a half talking about how the Fed's wrong. Remember the transitory story, and then it wasn't transitory, and all that stuff. I finally figured out something, and I'll reference this more. I was watching a video by a professor at Chicago Institute, and it was just amazing because he's basically telling you why politicians lie and why governments lie to you. And some of it's just to posture. We already know this, but they're telling us, actually, if you invert everything they tell us, you're going to have it 100% right. They told us it was transitory. You remember I told you it was not. But it was easy to take the other side of this trade. Now they're telling you that it's not embedded, and it is. And the reason why there's several things out there, and once certain types of prices start to rise, they don't go back down. I was telling somebody the other day, I was talking to him, and I had an old lithograph on my wall, and it was a cartoon of a guy standing in I believe it was a post office, and he wanted to buy futures on postal stamps. Why? Because they only go up. They never go back down. They never lower the rates once they go down. That's the same with electricity, utilities, and even now they're embedding this in gasoline and energy in general. And then there's wages and this whole push of trying to get everything to be equal. They want to make the economy like a NASCAR race where everybody has the same engine, same basic bodies, same stats. Nobody can outperform everybody. Well, you know what it's called? It's called socialism, or maybe even communism, right? So that's what's being presented out there, and somehow this is like the right way to do things. Meanwhile, there's a whole group of people that are not even close to participating in that concept, but they are promoting it. So I think this is the thing that you can just get it dead right every time. If Yellen or any of these jokers come out and say that something's not, it is, And it's very, very simple. And I know most of you have figured this out already, but I was just looking at everything this weekend and, looking at what the Fed said, what they're going to say to us next week. We can pretty much flip the script on everything. I'm just going to go a little bit further on this rant because there's something else that came to mind is that, and I know I've been criticized and commented on this channel about this concept, but I continue to believe that the Fed is using the BOE and the BOJ to do some of their dirty work and to try to shift market sentiment. Now, the crisis in the UK has been crazy, and it's still crazy, right? I think by this coming Friday, we're supposed to have a new prime minister in the UK. We'll see if they follow through with that. I think they just probably throw Boris back in there, right? And it makes it an easy trade. And he's right back and get the guy that you hated and you kicked out and fired and put him back in the job. But we've just got just a lot of this stuff that's going on. Some of the action of the Bank of England and some of the things that we saw in Bank of Japan. I'm going to talk about that again because some of these effects are very short-lived, and there's still a lot of forces out there. And this is my argument against people thinking that somehow there was some big capitulation on, especially in the bond market, on Friday. I don't think that's the case. I'll set it all up. I'm going to go through what the technicals look like and what my expectations are. But there are definitely some trends that are still alive, and I'll cover everything. So let's go ahead and cover the database. Quite a bit going on there as well. So let's get into the rest of the show, and I'll show you exactly what's going on. Okay, so here we go. This is the weekly database that I'm showing you right now. We actually had 145 buys. We had 1,009 sells. We went from about a 22% long to a 17. So in spite of the 5% rally last week, we didn't get any traction on the intermediates. I talked to you about this on Friday. I don't think a lot of these intermediate trends are turning yet. The short-term trends certainly have lots of volatility, and there's likely to get some traction there. But just like we saw in the last sequence of events going back the last couple months coming out of the June low, we never saw the intermediate database come into play here at all. And I don't think it's ready or even close to getting there yet. So intermediate trends are still very much negative and not any turn at all. So let's go over to the daily. And having said all that, we did get some decent traction on the daily. We got 2,517 buy signals and 148 sells. We moved the database up to 21.96. And I talk to you folks all the time about this. I talk to you all the time about the database getting to 22%. So 21.96, that's right where we are. We have a reasonably positive day. We'll probably see more traction on the short-term basis. I don't expect to see a major traction, but hey, who knows? The markets do what they do, and the database is possibly going to get over 22%. So the next metrics that I want you to watch for is between 22, 28, and above 28, we start to see some more reasonable traction. So I would not get too excited about what's happening here. There's quite a few buys. There are one of the other things I showed you, I've got it on the screen here, is the sectors that are long on a short-term basis. Right now there is 8 sectors long. This is short-term, and we've got basic materials and capital goods, conglomerates, consumer non-cyclical, energy, and financial and transportation. Big winner, I've been talking about this for a while, is energy. On a sector basis, it's up 7.45 in the last 2 weeks. So we're up 7.5% just in the last 2 weeks. So there's still a lot of traction going on in an energy sector, and there's still a lot of positives going on. There is so much going on in the energy sector that it's not likely to roll over just yet. In fact, I think there's still going to be more traction, as I've been pointing out for the last several weeks, as I do believe the energy sector is going to provide still more traction and probably some more profits for those of you that are trading those energy stocks. All right, so we'll go through the S&P now, and I think the S&P is getting fairly interesting. It didn't seem very realistic when I go back when we got this reversal several weeks ago. The algorithms were suggesting that we're going to see a positive segment come out in the market and that we'd see appreciation later in the cycle. Back on the 19th, we got Fibonacci targets to the upside, and now we're starting to satisfy some of those targets. Right now, high target 1 was 37.50. We hit that last week, but the next levels 38.45, 39.03. These are still very valid, and the algos are actually suggesting we have at least, on a short-term basis, we're going to have some strength for at least a couple days. The PPM2 is likely to stay positive. The forecast is for it to stay with the moving average start to move up into trend mode. And I've been talking about this, the way this works, everybody knows there's simple moving averages. To get the moving average to trend and to accelerate to the upside, you've got to keep prices above there. And right now we're at 36.88 is the 21 period moving average. The 10 is 36.81. I think we could potentially trade back into that level again. But we look at the market grid for today, they're over on the far right-hand side of the screen. What you'll see there is we're looking at 38.15. Let me get the right number here. Yep. Yeah, just making sure I'm on the right chart here. Sorry. But yeah, so the market grid is suggesting right now that we're going to see our R2 is 38.15, so we've already printed that. 38.43 is R3. That would be an extreme. We also have a Fibonacci target, as I mentioned, 38.45. So R3 is also the Fibonacci 2 target on this pattern. On the downside, S1 is 37.39, and that would print us down below the 10 period moving average, which right now is 36.81. As I mentioned, 36.88 is the 21 right now. So we've got the 21 and the 10. That should be substantial support at these levels, especially with the PPMs right now at a plus 0.4 on PPM1. You'll see it in white over here on the right. PPM2, 0.08, so it's not quite in trend mode yet. But in the next couple of days, we should stay above these levels and see at least one more acceleration and potentially getting to a minimum of this 38.40 and the potential of getting up into the 39 level, which the upward target is 39.03 on the upside. What I want to point out here, just as we talk about these markets, and I'm going to go to the weekly here before I move on, but these patterns that are set up are pretty substantial, and there's also some things coming in. When I show you the weekly here, there's some weekly resistance coming in here, and I've been talking about the intermediate downtrends, and those are going to become dominant over the next couple of weeks. So there is going to be a limitation. If we do print up into some of these levels, then I'll talk about exactly where the rejection points are likely to be for resistance. But there's definitely some still more upside in spite of what I think a lot of folks have been super negative. But I think as we go through the weekly, you'll see something else that's starting to occur there. But we're a long ways from turning these weekly trends. So let's take a look at the weekly. And the 10-period moving average actually came into play already today. The 10-period is 38.06. The high was 38.13.25. So we printed, as I mentioned, R2, and we've already started to reject off of that. The algorithms are suggesting that we're going to stay positive for the next several weeks. So what's likely to happen is that the 200 is also going to be in play. That's way down at 37. All of a sudden, 37.01 is a long ways away, right? We've traded over 38 handle tonight. So we're looking at the numbers over on the right, and we look at the market grid for this week, and we're looking at S1 37.11, S2 is 36.50. I don't see us getting there. The 200 is right now at the 200 is 36.99, so I suspect we'll hold above S1 for the week. On the upside, R1 is 38.16, already printed it, right? We're 13 high, so we've already got an R1 weekly, and R2 is 38.75. So I would just summarize from looking at these numbers here on the weekly as on the upside, the extremes are going to be somewhere between 38.40 and 38.75 for the week. And with this big downtrend still in the PPM1, it's down at 1.18. Let me bring that up full screen. You'll see over here on the right, PPM1 minus 1.18. That tells you they're really, on a weekly basis, there's only about a 20% probability to close above that value, which right now the 10 is at 38.06, as I just mentioned. So it's unlikely that we'll close above that. The 40-period moving average, the 21-period moving average is at the 21 is at 3,900, and that would put us at that fib target 3, 39.06. So I just don't see that coming in. And as I've been talking about, I really believe what we're really setting up here is a consolidation and a possibility of just a sideways pattern. I'm going to go out one more level here and bring up the monthly. And I brought this up the other day, and I just want to cover it all the way. And I'll just cover the S&P at this level. I won't do this on the NASDAQ. But what we're looking at as we look at the numbers for the market grid, the S1 was 34.93. Well, we printed actually the low's been 35.02. So basically we printed S1 on a monthly basis. And of course, we've only got a week. The final day of the month is a week from tomorrow. So we'll finish that off. The other numbers to look at here is R2 on the on the monthly for October is 38.30. So we're pretty close to printing that. The next number above that, R3, 39.51. I don't see that being hit in the next week, but we do have some crazy stuff that's going to be delivered to the markets that markets are going to have to digest. And I think what we're likely to see is just plenty of volatility. So certainly anything's possible, but that would be your extreme for the week, for the month actually, would be that 39. Let me just get that number again. It would be 39.50. I don't see us getting there. 39.06 is a ceiling for this market right now. But it's interesting because what's starting to happen here on a monthly basis is we're starting to see some semblance of maybe of it turning up. It's interesting because ppm 2 is still positive 0.08, and the value for that is 42.13 is that moving average. So we could trade up as high as at the 10 right now is at 40.92. That would be an extreme if we come into November that we would print up into those numbers. So certainly not going to happen this month, not likely anyway. And we'll probably see the numbers I just laid out as extremes in the pattern. All right, we'll start with the NASDAQ. We'll start with weekly. We'll go top down. Weekly, like I said, we're printing into similar numbers weekly. The high so far has been 11,530. R1, 11,541. So we're printing into R1, but we're also printing into these moving averages. The 10, 11,635, 21, 12,042. That's your absolute ceiling. What's interesting about this particular chart, and it also exists on all of the indexes, but more predominant on the S&P and the NASDAQ, is that we're still seeing the algos projecting that the downside momentum is going to dissipate a bit, but the resistance at 11,600 is real, and we're not far from there. So we could get a rejection from these numbers. I'm just going to tell you folks that watch how the market acts right around this simple 10-period moving average and on the 21 if we print up there, because these are still in big downtrends. We have minus 1.57 here, just like I showed you 1.17 on the weekly S&P. The big time downtrends, these are the probabilities around those numbers at those moving averages are very substantial, that we're not going to be able to get above those numbers, and we're likely to see the markets get rejected of there. The best case you could expect is that we'd get sandwiched on the dailies between some support, which would be 1021 and probably the 40-period moving averages on the daily charts, and that would be relevant to the S&P and the NASDAQ. Let's go ahead and take a look at the dailies. Interesting patterns here. Like I said, a lot of this stuff is being projected to continue. The algorithms are suggesting we've got several more days up. So the 40 right here, which is the cyan line, is right now 1649. If we were to get above that, then there's a fib target at 11,841. So I said 16, so I'll correct that. Is the moving average number on there is right now at 11,649. So that between 11,649 and that fib target 11,825, just in round numbers, the algos are suggesting we're going to stay strong. And if you folks have been paying attention, you see these things have been spot on, and we're continuing to see this trend go up. And the potential here is fairly substantial. And as I'm going to go back to the weekly for just a second here. And what I want to show you is that the algos, like I said, are suggesting that we're going to see some of the downside burn off, which suggests that we could trade above this 10-period moving average, but that's probably a couple weeks away. So expect to see some rejection out of this level here. We're going to run into a little bit of resistance somewhere in here this week. I'll update this as we see the margins as we go through this week. We'll talk a lot about that in the live room. So if you have the indicators or you're subscriber to the live room. We'll talk about that tomorrow. And if you don't have the indicators, as I always tell you folks on this right here, there's the link to get them, and you get a free 30 days into the live room. So make sure you get those, because they've been amazingly accurate, and you can use these on any stock and anything. We're getting crazy results and hearing a lot of good stuff from folks out in the field. So it's very, very good to hear. But the point of what's going on here with the equity markets, we're coming into some resistance. As I mentioned, just kind of reconcile this, and I'll cover the Russell here next. But really, as we talk mainly about the primary markets, the S&P and the NASDAQ, what we're looking at here is that we're coming into a point where we're going to hit resistance, and we're probably going to set up maybe a larger consolidation range, and that's what it looks like as we come into the end of the month. So this is the last full week of the month, and we got tons of earnings, big time earnings, right? We've got all the big boys reporting this week. So expect to see plenty of those things going on. Plus we've got some reasonable economic stuff coming out as well, especially Friday PCE, and there's like I said, there's plenty of numbers. There's a lot to digest this week and get some directional. But I think ultimately there's still going to be a slight bias to the upside, but watch out for some of these resistance areas that I talked about. All right, we'll start with the RTY weekly, and it's already hitting that resistance here at the 10, and we're right there. 1764 is the 10-week moving average. The high's been 1769. We're printing 1750 last, so we've already got a little rejection going from there, and there is some potential downside here if we look at the market grid for coming into, this is weekly now. Looking at the weekly S1 1718, that would be a min on the R1 side. Just want to get this, what the high has been so far. High is 69, so we're almost R1 1764. This is a weekly pattern, and we're just seeing these things continue to try to turn up from this standpoint. Let me just fix this. I'm having trouble with the algos showing up. There they go. But similar, wrong chart. Sorry, just similar patterns like I've talked about across the board on all the indexes. At least a couple more days to the upside is what everything's projecting. We do have some downward fib projections coming in on the Russell, and it's been an interesting scenario. I just want to come back up and talk about this for a minute, but the Russell has been the weaker of all the indexes, and I still believe that's because of what's going on with the interest rates, and there's a lot more companies. These smaller companies are affected more so than some of the larger multinationals. And if these guys have to borrow any money to do anything, it's going to be very difficult, and they're going to have to pay up. The days of free money and expansion in these companies are definitely over. So that might be what we're seeing here as well. Next, we'll cover the 10-year, and this has been interesting. This is the monthly, and they seem like really crazy, almost stupid numbers that were being talked about, and when I cover this usually at the beginning of each month, and I'll go through that again. But what we're seeing here is the market grid was suggesting that R3 was 429, and we've ended up being to 433. RXT was 446. I remember talking about this when we came into the first of the month. It didn't seem very realistic at all. But we come back here and we go into the weekly and we back this up. This is the thing that I want to point out. A lot of folks talking about, somehow some big event happened in the bond market on Friday. It did not. The trends are still very much up, and we're looking at 3.98, 2.21, and 2.21 ppm 1, 2, and 3. The angle of attack is huge, and if we just look at the market grid expectations for this week, 430 R1 is 429.30, R2 is 438, and then the extreme is 454. And I'll show you when we cover the Dow next and show you the yen. It's like there's a lot of resilience. This Dow is very strong, and I believe we're still seeing some selling coming into the 10-year as it goes. There's no reason to own this thing. And I'll just say, I didn't mention earlier, and we'll definitely get into talking more about the Fed as we come in this week. But they're not backing off. They're going to continue to raise rates. You're going to get 0.75. You might get another 0.75 if these inflation numbers don't come down. We'll see what PCE numbers are coming in. But for sure, you're getting 0.75, and they're going to continue with everything they've told us. They're not going to back off. There's no U-turn. There's no pivot. None of that's going to happen. That does not mean, by the way, that the markets don't perceive that that's going to happen. And that means that market sentiment can change, and maybe there's some backfilling on the 10-year. I'll go through some of the expectations or the potential of that. But overall, the trends are still up on all of these on the 10-year, and we could go through the whole spectrum. There's something else that happened the other day. We've got right now the 30 is printing 4.3, and the 10-year is 4.21. And for the most part, the 30 has been under the 10. I've talked to you about the back end of the spread of the yield curve, and the back end of the yield curve has been suggesting that we were going to get this big downward slope on the back end. Well, all of a sudden, the 1030s went this way at the very back end. Now we've got the 30 above the 10. And I watch primarily 510s, 1030s. That tells me a lot more about what's going on. And this little flat back up here is fairly substantial. And I think there's some implications here on maybe where the Fed, this is what we should be able to figure out, what securities the Feds are running off. And I think we had a combination of things, because I'm going to go right to the yen and the Dow next, as the Dow strength, and I think the Japanese selling. I think there's others, just about anybody that is not in the U.S. that has to buy things that are denominated in dollars, whether it's petrodollars, whether it's oil or other types of commodities. They're selling stuff that they have to raise money, and I think that liquidation is big. There's some other things I'll be talking to you about in the consideration with what's going on in the bond market, but for now I'm just going to leave it at that, and just know that as we come into this week, we're still got probabilities of seeing 430 plus. And I'm going to bring up the daily chart for a second here. I've talked on and on about these numbers, but they're still out there, which is target of 503, 559. So these are very big numbers. They're still valid. We're seeing some backup where the PPMs kind of turned over a little bit on the dailies. Pretty much all that's going to do is, at worst case, we're going to come back into this 10-period moving average, which right now is at the, let me get the numbers for you. It's at 402, and it is jumping right now about 3. So around, if we just look at the market grid for this week, not this week, for tomorrow, is that it's suggesting that somewhere around between 418 and 416, the extreme would be 413. And I looked at the aftermarket just a little bit ago. We're trading 19, so we're down a couple of ticks here. So there's a slight little bit in here, but this will ultimately be turned around in the next couple of days, which should stabilize. The absolute extreme would be coming down to the 10-period moving average, which would put us right around 405. That would be a big move. If we print 405, then all these numbers that I was talking about a minute ago on the equities are going to print up. We're going to print up to the fib targets 3s, because if just a little pullback like that in the 10-year would be perceived as very bullish. I mean, I don't think we get under 4% for a while, but anything pulling back to anything that looks like that, 412, 410 or less, that's going to be looked at as pretty bullish on the equity market. So there's basically what we're seeing here is that there is some minor pullback possible, more of a sideways range. The weekly is telling us that there's still some probabilities to the upside. All right, we'll take a look at this is US dollar. We're looking at the futures. What's interesting about the forecast on this is that what we're seeing is forecasting for the market to remain above the 40-period moving average. We're looking at stabilizing in a positive mode. The PPM1 is trying to roll down, so we are basically sandwiched here between we'll say the 40 and the 10-period moving averages. The 40 is 111, the 10 is 112.55. So 111, let me get an exact number, 111.15 on the downside. So we're looking at that being fairly stable there. But let's go to the dollar yen, because I want to point out something that has happened. And I'm sorry, that's why I wasn't getting the right, 1 second here. Yeah, so we look at the dollar yen, there's a couple, something that happened several times. I want you to see this pattern. I'm going to blow it up enough that you can see it. But over here on the September 22nd, we had kind of a reversal down, but the big one is right here, September 22nd here, we had this giant move, and I talked about where we had a range that was greater than the past 11 days. Well, we did one of those again on Friday, and we traded all the way down to the 21-period moving average, which got us down to the 46 level, 146.21. The low was 146.20 and a half, so right to it. And now we look at overnight, we've printed down a bit lower than that. We got down to 145.25, and then we've rebounded and we're trading at 148.90, almost back to 149. And I want to show you up here, there's some targets that seem a little ridiculous, but I'll bring them up anyway. 154 and the potential of 160. And what's happening with the algos, they're telling us that we're going to go sideways. So we're going to consolidate very similar to that area. I just want to bring that up and focus in on this. And to the last time we got one of these rejections, we actually traded up and retested that high within 2 or 3 days. So watch how this thing acts here. It looks to me that the angle of attack is still substantial enough that we're going to see the market stay up. PPM1 is at a plus 0.21, so just about trend level. And that number right now is 148.35. So I think if the yen starts to stabilize here and does not rally back to test the highs, we're looking at the market grid, 149, 148.90, 149.50, 150 and change is within the daily range expectation. We're going to see the volatility kicked up. So watch this area pretty close, but I think we get another consolidation, and the real story is here, right here, which let me bring that up so you can see this real quick. This is the real story here, is the weekly trends. And the weekly trends are still suggesting that we're going to stay above the next couple of weeks, where the PPM1 is at a 0.81. So that trend is huge. That's at 144.2. And we're looking at that number moving up about 100 points per week. So all of a sudden 145, 146 is going to be support in here. All right, next we'll take a look at crude. I've got to fix the scaling here just a little bit. Crude is becoming very interesting. This is the weekly. And the algos are still suggesting we'll stay range bound, but all of a sudden we're getting Fibonacci targets to the upside. And these targets are very substantial. 107, 118, 126. This would be a pretty big rally here from that standpoint. And but the algos are suggesting basically stable. So my expectation is that we stay locked in for at least another week or so between the 10.85 level here. Right now we're at 84.98, so right where we're trading right now, between there and the 21 period moving average up around 92.93 handle. And as I've talked about, and I have covered, oftentimes I've covered the XLE. Those stocks are going to continue to do well. Anything on a crude price over $75. So don't expect to see those stocks actually crumble at all. And if we do print these numbers I'm talking about, there's another mini bull market coming on, and these stocks will be a secondary rally from what we saw earlier in the year. And it's really interesting that everything, as much rhetoric as there against fossil fuels, that fossil fuels are the only thing to make money in the markets right now. So once again, fade whatever you hear out there. If you got a bunch of folks telling you, not the bunch of folks, but the government telling you certain things aren't true, then know that they are, or telling you that they're true, know that they're not. I'm telling you, they're the easiest fade out there, and we've seen plenty of examples over the last couple of years on all of it. Doesn't matter who's running the administration. And anyway, there's going to be more on this, because like I said, I ran across this YouTube video I found was very interesting, just talking about why and how and the different types of lies that the government actually is telling us all the time. What's even more interesting, this guy was, this professor was justifying that it's all good. There's some things that are good that they're doing. So anyway, us little folks don't get a lot of say in things, but pay attention and just learn how to fade these guys. All right, next we'll cover gold. Interesting, I talked to you about this, is the weekly. The algos are suggesting that gold is going to try to turn up. The PPM1 is being forecasted to get into trend mode. So that means if that's going to happen, we've got to get above this 10-period moving average. And right now that's 1688. Last trade right now, 1660. So we'll see how this week plays out. I don't think these things are going to happen until next week, but it looks like the pattern is starting to firm up. There's also a pivot at 1617, and we printed down last week. We got to 1621, and we did print a slightly lower low because I believe we had a 22 low. Yeah, right here. We had a 22 low at 1622.20. So we printed through that low by a few pennies and then reversed back up. So these patterns are starting to suggest a ways off. I'm going to say 3, 4, 5 weeks off that gold is finally going to get some traction and start to see some upside, and ultimately getting toward maybe 1750, and extreme would be back to 1760, 1800 would be the targets on the upside. But that is weeks away, but definitely some value down in the market down here. And like I said, we printed down just by like 50 cents and into a new low, and that was it. So I think that we're going to see something very, very interesting coming in. Like I've said before, sometimes I don't want to cover gold because it just seems like there's no reason. It looks like this thing is coiling up to do something substantial. And it's also evident, I just brought up this chart here is the monthly. The monthly algos are suggesting stability, which would be a trading range. And we're talking about months in the future. We're talking 23. So just to maybe tie together the whole Yellen comments that we had, where she was saying that inflation is not embedded. Maybe it is, and maybe gold will become the inflation hedge that many folks are calling it. Okay, finally we'll get to the Bitcoin. Let me just get some scaling issues taken care of here. Once again, as I've been talking about, we just continue to defy gravity. Here we are at 19,428. We just stay in this pattern. I mean, it's sort of boring, but I'll go through the algos are suggesting just more of the same, choppy. We do have Fibonacci targets up above here, 20,113, 20,876, and 21,342. These are valid patterns. We're not really seeing that the algos are suggesting we're going to get to those levels, but it does show a slight stabilization, a little bit of strength here. Let's go to the weekly, see if we can get something to go on here that will give us a little better insight. But we've got one of these weird little wedge things setting up here on market grid. Let me expand this just a touch more so we can see exactly what's going on here. But there's still Fibonacci targets above on this market up at 32,000 plus. And we're looking at PPM1 is trying to turn up again. PPM2, all of these things have been stable. And I've talked about this before. I mean, this is the last 4 weeks of weekly closes, right? 19,057, 19,444, 19,262, 19,573, and here we are again at 19,410. So this stabilization that we've seen here has been pretty amazing. I know a lot of folks seem to think that we're going to get a big collapse out of here. PPMs are saying no, not so fast. That's not what's going on here. So we'll have to just let me. I'm trying to rescale this, and it's not going to work. So, but yeah, so these patterns have been very consistent over the past several weeks. So I'm just expecting more of the same. The key element is going to be a break above the 21 period moving average, 20,968, around 21,000. It's 1,500 hours away. If there's any excitement, we get any kind of movement in this week with equities and things that I've talked about tonight, and look for at least some challenges of these values. Okay, folks, that's going to do it for tonight. I, as always, appreciate your participation. Just looking at a couple of comments here, and I can't look at comments and do the show. So anyway, looking forward to being in the live room tomorrow, 1:00 p.m. Eastern time. We'll see you there. Get the indicators, the links up on top here. Thanks for being part of this channel. I keep meeting some amazing people. Those of you that I just met recently, thank you. And it's an amazing experience getting to meet. There's been several new people I've met. So, hey, thank you for being here. All right, folks, have a great day. We'll see you tomorrow in the live room. See you tomorrow night, same place.